Welcome to Yellow Tunnel. My name is Royal Caribbean. I'm CEO and founder of Yellow Tunnel. And today we're going to have our weekly strategy roundtable where we talk about current market conditions, what to expect short-term, medium, and long-term, key support and resistance level on major indexes, macroeconomic conditions. We're going to review some of the latest earnings strategies, trades, Nike, FedEx, and talk about some of the positions like Royal Caribbean, the recent trades. The goal is to answer any questions you might have. So if you do have questions, please enter them. My goal is to make sure I answer all the questions. For those of you who are new, if this is your first live event, do me a favor, type in first. Always want to welcome new subscribers. Trying to do these webinars at different times: Sunday morning, Tuesday afternoon, Thursday afternoon, Thursday 7 p.m., Monday 7 p.m. So I appreciate you guys attending. I do see familiar names, but some of you are new. So if you're new, just type in first. Always want to welcome new subscribers. In terms of my background, the difference between Yellow Tunnel and maybe some of the other subscriptions that you have out there is that we are very heavily invested into artificial intelligence. We have neural networks, a team of financial engineers that are building new models, enhancing existing models to provide signals, short-term, medium-term, and long-term signals in the market, and I use stock and option trades to trade these signals in a live trading room environment. I'm doing that for over 25 years, so that's my background. Disclosures are very important. I'm going to go to specific trade ideas, so please look at the disclosures. Trading stock and options involve risk, not suitable for everyone. If you're new to trading stock or options, I encourage you to visit the link on your screen, optionclearing.com, to understand the risk associated with trading stock or options. I'm not a financial advisor, not registered with FINRA nor SEC. All right, before we jump into trading psychology and talk about risk aversion, let's talk about recent developments in the market. So let's talk about spiders, the model first. The spiders itself, the model, you could see support for today, 540, overhead resistance is 550. 550 is the all-time high, 540 is the gap after the CPI data. So I agree with the model, key support are 540, overhead resistance is at 550. We've been trading at that range for the past few weeks, very narrow range. But the trend is to continue making new highs. So long-term trend is still positive and bullish trend is intact. So we can see model predict 540, that's your gap, the CPI gap, and then 550 is overhead resistance. So there are two different scenarios that can take place, right? I'm also looking at the positioning for spiders. Let's take a look at spiders in terms of positioning. Looking at both 0-day steel expiration weekly options and also July expiration, which is July 19. So you can see that majority of support is 540. We do have 540. It's a relatively small position at 540, but much bigger position is at 530. So personally, going into the next earnings cycle, which will start in the next 2 weeks, 530 is a key support. The only thing that could break the support, maybe, CPI inflation data is going to be harder than expected. Maybe unemployment data this Friday. We have elections in France, some of the geopolitical risks. So that is definitely on the table. But as long as there is no black swan events, something that market did not anticipate, 530 levels should hold. On the upside, the overhead resistance is at 560, 555, 560. You can see definitely a put skew, right? Looking at the volatility skew, it's geared toward puts, where people buying puts and selling calls, and you see very high, above 0.5, meaning that people are hedging. So I agree with the positioning and the analysis. 530 is your 50-day moving average, right? On the upside, 560, as we are approaching the next earnings season. So there are three scenarios going into July expiration, right? We could break to the upside after the earnings start, right? Scenario number one. Scenario number two, we're trading in this range between 560 and 530 based on positioning. That's what majority of option traders think, that going into end of July expiration, we're trading in between 560 and 530. And scenario number three, right? There are geopolitical risks, there are elections, right? So election in the United States, election in France. Dollar is weak. We've seen some of the home builders selling off today. So scenario number 3, the 50-day moving that doesn't hold, and we are back to this back below 530. So how many of you? So why these exercises are important? I do them every day in live trading room, because if you're bullish, right, and let's say you say 1, well, you need to decide how much money you're willing to risk, right? And by seeing the support at 530, then you can say, okay, if I buy at 545, I'm willing to risk 3%, right, to the downside, 15 points, right? So then you know, if in most of our subscriptions, I propose not to risk more than 2.5% of your portfolio. So if you have $10,000, 2.5%, that's $250. So then on this trade, you're risking 15 shares. And you do go through this exercise on all of your positions, right? Granted, S&P, a lot of stocks are highly correlated to S&P, but the same exercise, right? The same exercise. You look at the positioning, you look at our models, you look at the regular analysis, and that's how you decide. So this exercise of positive and negative rehearsals are very important to decide position size, 1. And second one, not to be influenced by risk aversion, right? Almost in every live trading room, I talk about risk aversion, right? Prospect theory, that we have different relationship with gains and losses, right? When you confront it with $500 gain or $500 loss, you make a different decision, right? On the gains, you usually take the $500 gain, but if you confront it with $500 loss, you usually wait, right? You wait because maybe it'll come back, and I'm going to avoid it, right? So prospect theory is important, risk aversion is important, understanding the biases, right? Very important. And that's why trading psychology is important, and hence Yellow Tunnel, the name for the website. All right, how many of you say 1? We are heading above 560, higher highs, higher lows. 2, we're in the range, 3% to the upside, 3% to the downside. And then how many of you say, no, this is, we're going to have a lot of debt coming due. High yield dropped precipitously today. Bonds, corporate bonds. So, and usually heading into August, September, bigger pullback. Bill, Chandu, Clem, David, Ed, JG, Pierre, Luis, Mauricio, Raj, and Trader. How many you say 1? Raj, Luis. How many you say 1? We're breaking about 562. We're trading between 560 and 530. 3, we are breaking below 50-day moving average. 2, okay, thank you, Luis, Raj, Mauricio, Ed, David, Bill. All right, so I'm going to go with 2 as well. I think we are stuck in the range. Maybe not as narrow as 540, 560. That will probably be broken, right? 560, 540 is probably going to be broken either by unemployment data this Friday or CPI data next week, right? At the start of the earnings season, right? But it's reasonable to assume that between 560 and 530 in the next 4 to 6 weeks. What are some of the risks, right? If you look, I was looking today at materials, you do have breakdowns in materials, right? The materials was one of the strongest sector this year. So we are below April lows on materials, and we're below April lows on home builders, right? And this is a proxy for economy, right? Home sales are down, permits are down, new constructions are down. So you can definitely see that the economy is cooling. Even though manufacturing PMI is above 50, so that's good. Construction spending is negative manufacturing data. ISM manufacturing data dropped below 50, so it's also bearish. And then we have Powell's speech tomorrow in Portugal. But all eyes are unemployment data, right? So you can see home builders sharp drop, and you can see high yield. So there is a widening between the junk bonds and AAA, Treasury, U.S. government treasuries. So the yield is getting wider. that's considered to be negative. We're not at April lows, but below 50-day moving average, right? And you can see that also in LQD. Sharp drop. What else is interesting? Industrials did pull back, sitting at the April lows. So value stocks in general are underperforming. Healthcare is pulling back from all-time highs back to the 50-day moving average. Retail sector dropped below 50-day moving average. Transportation has been weak despite FedEx earnings, but it broke through April lows quite a while ago. And you do have rotation into QQQ, right? Stocks like Magnificent Seven, not all Magnificent Seven, but stocks like Microsoft are making new highs. Google are making new highs, right? So it's a familiar story. Amazon, I think, making new highs. And the breaking out. And you do have kind of chip stocks, AI stocks are pausing, right? You do have kind of gamma squeeze, potentially ABC pattern, right? Potentially ABC pattern. You know, going to the 50-day moving average, right? So definitely a stock pickers market. You have to be careful. Models are helpful, right? The AI models are helpful because they can show you which stocks are in uptrend or staying uptrend. So it's not a one-way trade. There are different signs of concern, right? That I just outlined. Dollar. Another one is dollar is still stubbornly strong, almost at year-to-date high, partly due to geopolitical risk, right? In Europe, elections in Europe, euro dropped below 50-day, 200-day moving average at April low, and Japanese yen, right? That carry trade. Japanese yen just, you know, precipitously fallen and may continue to make new lows despite some of the government intervention. So those are some of the risks that could derail the current rally. But meanwhile, I still think it's a pattern of higher highs and higher lows. Any questions on the market? So in terms of some of the services that we provide. So Profit Accelerator, right? This is where I trade stocks. Every week I show you some of my portfolio, some of the stocks I own, and then you can enter your SMS, enter phone into your SMS, and you can actually see some of the trades. So today, Synchrony Financial, right? Synchrony Financial was one of the stocks. I bought it at 47.75, and exit half of the position 48.20, was able to capture 45 cents, so 1%. This is a short-term trade, and then I'm keeping the remaining position to look for 2% gain. Similar with Goldman Sachs, also trimmed the position. We were talking about RCL was an idea last week. So I tried to add one stock at a time. So you have RCL. What did I put RCL? Was it dynamic? I lost my RCL. What happened to Royal Caribbean? Okay, but you know, we did want to talk about Royal Caribbean. It did break through the new high, so I still see an upward 50-day moving average. At this point, I did close RCL. It was a signal from last week. It did hit. I was able to capture 1% and 2% gain on RCL. It did pull back to the breakout level, but I still think it's a pattern of higher highs and higher lows. Some of the stocks like RCL. So today was Synchrony Financial, similar setup, right? You have a breakout to the upside on above average volume. So I think Synchrony Financial continues to go higher. And Goldman Sachs, right? This is facing overhead resistance, still bullish on Goldman Sachs. So these are the examples of Profit Accelerator, right? Today in aggressive power trader, that also we had RCL, but CrowdStrike, Bank of New York, CSX. So you have different daily signals based on AI, and then you take the stock like Synchrony Financial, right? And usually what I do is I wait 15 minutes, right? So you look at the 5-minute interval to find where the support is. And you can see after 15 minutes, you can clearly see that the gap is usually serves as a good support, right? You can use the gap. If you're more conservative, you can assume that if it closes the gap and goes lower, then you would get out of the trade. And that was the setup for both aggressive power trader and profit accelerator. You would trade them in similar. Profit accelerator, you can wait position, you can sit on a position longer. Aggressive power trader, you can exit position completely if you choose to. So that would be how you would trade, right? You can see I entered it right after 15 minutes. So that's the setup. I wait 3 5-minute candlesticks, model shows an uptrend, and I put maybe half of the position on, with the idea that if it goes against me, I want to be down only 1% of my portfolio, right, or less, and then make a decision if I want to stay in the trade or not. So that's aggressive power trader, gets updated every day. Very common question, well, what if I only trade options? I mean, we do give you a choice, right? You can trade either weekly options like PNW and Discover Financial has weekly options, or you can trade Synchrony Financial with monthly options. Usually I recommend Delta 70, Delta 80, so in the money option. And then, but entry and exit points are still driven by the support and resistance. So if I wait 15 minutes and I enter Synchrony Financial and you're doing Delta 70 or Delta 80 call, right, then you would still enter the option 15 minutes into the trade, and if I get out and look for 1% gain, right, I was able to capture 45 cents. If you're doing Delta 70, then you're capturing 45 cents multiplied by 0.7, 35 cents, 30 cents, right? So the entrance and exit of the position is based on the signal and based on the support and resistance levels that the model sees. But you can use some using options. You can use option spreads. People insist on using option spreads. Just keep in mind that option spread, the delta is even less, right? So if I exit with 1% gain on the underlying stock and you trade in call, delta 70. If you're doing spread, maybe delta 30, right? So that's something to keep in mind. Any questions on aggressive power trader and profit accelerator? So those are the two services. Short-term trading, this is combination of short-term and profit accelerator. These are all of these stocks I trade. These are my positions. Aggressive power trader, I don't trade all of them. These are signals for somebody who's looking for signals. And I occasionally put on the similar trades to give you an example. You can always go in and type in, stock that you want to analyze, like NVIDIA, and it will give you, long-term uptrends, support and resistance levels for NVIDIA, and any other stock you want to analyze. So that's AI analysis. I encourage everybody to watch the recording, right? You can't just look at the signals. You can't just look at the current portfolio, especially if you're new to trading or you're not sure exactly when to enter or exit. Then every day there's a live trading room. I encourage you to participate in live trading room. If you cannot participate in live trading room, then please watch the recording. You can see the history of all the signals. By going to the history, you can enter your phone number to receive the SMS message. And again, option portfolio gives you choices where you can trade options using these signals. So that's profit accelerator and aggressive power trader. Weekly power trader, similar fashion. It's a different model. It learns and trains, right? It makes inferences on larger data set, longer periods of time, right? It analyzes longer because the idea that you're going to hold this position longer. So General Electric, American Express, right? American Express, General Electric are some of the signals from, this week. So if you look at Synchrony Financial, right? Let's see how did American Express did. Similar setup, right? You had a pretty sharp rally. The model identified both stocks correctly that they're an uptrend, and we closed toward the session high. Right, and here maybe you don't do short-term trade. You look for maybe 1% gain and 2.5% gain. But these are weekly power trader. Dynamic power trade is where I trade stock and options. So you do see all of my position. You can go to orders, and then you will actually see not only the stock position, but also option positions. So I'm hedging. I think market is overbought short term. Dow Jones has been under pressure. So here I'm hedging, an example where I would hedge my portfolio. So you have, again, Synchrony Financial, Goldman Sachs, but in addition, you have option trades, right? And you can see all of my positions. You can look at the live trading room recordings, you can analyze stock and look at the history. So that's dynamic power trader. Earnings power trader is where I look for these asymmetrical returns, right? So you have, let's say you're going and you're looking for what's JP Morgan, right? So let's look at JP Morgan. JP Morgan is going to announce earnings in 3 weeks, July 19th, right? August 16. So you can already see that a lot of people are selling. Right, so you do have some put selling, the 170 put selling. Not a lot of call buying, but the majority is put selling, right? Very large actually put selling. So somebody, you can see already people are getting ready for the next earnings season. So you want to make a decision whether you want to be long or short volatility, long or short volatility. So I'm using the positioning data and I'm using the vol skew to decide whether I want to be long volatility, meaning buying calls, buying puts, paying debit price, butterfly, condors, call condors, put condors, puts, debit, put spread, debit, call spread. Or if there is a lot of, let's say, selling of the puts, right, in JP Morgan, and if you look at JP Morgan from last week, from last earnings, there was actually similar setup, but pretty sharp pullback after the earnings, right? Because they missed the estimates. So it could be a very similar setup. It's trading in very similar level as last earnings. You could have another pullback because nobody's hedging, right? Majority of the people are actually selling puts as opposed to buying puts. So that could be an opportunity to be long volatility. How are you, how do you execute long volatility? So last week I did, I think, 2 or 3 trades. One was Nike, right? This is an example of asymmetrical returns, right? Where you're risking, you have a well-defined risk. You can do a condor, right? You can do call condor or put condor, or you can do a butterfly. So here's an example where I did call and put butterfly. I know that I could not lose more than 63 cents because I'm paying debit, I'm long volatility, right? Directionally long volatility, and I risk 63 cents to make $1.85. So, almost 200% return. FedEx was similar, right? I put on a trade for $2, butterfly, and I closed it for $3, right? So 50% return. So those are some of the examples of where sometimes, based on distribution of probabilities and supply and demand, and looking at the high open interest rate, everybody talked about gamma squeeze, right? When dealers are short gamma, right? When dealers are short gamma, that means that if you have negative news on JP Morgan, that could pull the market to, 195 or even 180, right? You can see high demand for 180 strike that happens to be the same level as last time, right? Exactly at 180. So a lot of people don't think it's going to be at 180, so they're selling puts. Dealers are short gamma, so any negative surprise, and you could see JP Morgan gravitating toward 180, when there's earnings announcement. Not tomorrow, but when there's earnings announcement. So this is where you have, this is going back to game theory, right? It's not, usually people are either always, another trading psychology concept, you usually always in one area, right? Let's see, is there an easy example of game theory? Oh yeah, so here we go. Right, hawk and dove, right? Bulls and bears. We either always bears or we're always bulls, right? But game theory basically says, based on market conditions, you have to figure out which square you want to belong to, right? So it's very important to understand the psychology of other traders, of institutional traders, of option traders, futures. That's why positioning data is very important, because it doesn't really matter what I think about Nike or FedEx earnings. What's important to see what the bulls and bears are looking for earnings in Nike. If you look at the live trading room, you will see profit and loss image for Butterfly. All right, so here you select a middle strike, right? You select a middle strike, right? Let's say I'm bearish on JP Morgan, 180 strike. So I would select 180 strike and maybe do, 190, 180, 170, right? Buying 190, selling to 180 and buying 170, put Butterfly on JP Morgan, right? If I think there will be the negative or positive surprise. But you have to be correct on the strike price. So sometimes what you can pay a little bit more, right? This is going back to probability of success. I like this AI. A profit and loss diagram can be used to show the profit and loss scenarios for put counters across different stock prices. For example, the quantitative short counter. Okay, good. This is iron counter. Did I say iron counter? I did put counter. Okay. Well, iron counter is the most important, the most popular. It doesn't matter, right? So just think about this is same thing. But if you don't want to pick the specific price, right? It could be 180, right? Or it could be maybe 170, right? So then you would structure your put spread where you would say 160, 170, 180, 190. So you have a pretty wide range that as long as the JP Morgan ends between 160 and 190, this is a profitable trade. I mean, plus the premium, but you get the idea. So you can either do a Butterfly, which is a combination of the puts, bearish and bullish call spread with the same strike price, or here you have bullish put spread and bearish put spread, right, with different strike prices, right? So, but the point is that very important to always keep in mind that there is always probability of success versus return on capital, right? If you do Butterfly, this is probably the most effective way where return on capital is very high, right? Return on capital is very high, right? You see 50% return, 200% return. We had trades with 100% return, right? Sorry, 1000% return, tenfold. But probability of success is smaller, right? So when you structure this trade, it's something to keep in mind based on the volatility and based on historical implied volatility. Positioning, the skew, you want to decide whether you want to be long or short volatility and what the volatility skew is. So that would be an example of earnings power trader, right? Same thing, you can always analyze any stocks. You can watch the live trading room recording for each of these trades. FedEx, every day there's a live trading room. So I don't just send signals, I explain them meticulously. So please watch the live trading room, and then you can watch the trades by entering your phone number. So we went over the dynamic power trader, earnings power trader, profits weekly. So those are the paid services. You can always go to dashboard. I encourage you to log in to the website. If you haven't logged in, you can always reset the password. If you forgot your password or you never set it up, reset your password. But log in dashboard. There's a getting started guide, webinars. We have one-on-one consultation. You can schedule one-on-one consultation. You can blog. Every Sunday we send a blog, and every Wednesday I send 5-minute video explaining market conditions. Right. So under trend analysis, you can actually see the 5-minute video and our regular 1-hour webinars like today. Under market plan, I try to put different educational webinar along with trading psychology. So three key metrics for consistent trading results. On the return on capital, probability of success, estimated move is a very important topic. I encourage you to look at it. Importance of risk management, obviously important topic. Under trading discipline, I talked about mastering bullish call spreads together with bar chart, also a very important topic. I encourage you to review it and watch. Any other questions? All right, if there are no other questions, that's all I have for today. I covered all of the services we provide, some of the free content that I encourage you to participate at info@yellowtunnel.com, so you get this 5-minute video, 1-hour video, and blog. There's a lot of concepts on trading psychology, game theory, prospect theory. We talked about self-serving bias, journey as a trader, the importance of trading process versus outcome. So a lot of important concepts that I encourage you to open up free account, register, get your password, and explore the blog and the video. Any other questions? All right, if there are no other questions, thank you very much. You guys have been a great audience, and I will see you on next webinar. I'm going to do Wednesday. Happy 4th of July. There's not long weekend, but we have 4th of July. Then I'm going to be traveling. So Wednesday, I'll try Wednesday also at 7 p.m. Chicago time, 8 p.m. Eastern. We have a lot of people, so I appreciate you guys joining. Thank you very much. Keep an eye on our emails at info@yellow.com, and that's all I have for today. Thank you.